I hope you had a good lunch there. Before we get started on this afternoon's session, I just want to remind you of a couple of things. We'll be having a drinks reception later at 5:15 up on the level 11 by the pool, by the beautiful pool. So please join us for that. Also, for those of you who are interested in energy, oil and gas, we have a little conference here next week at the Hyatt. On Wednesday and Thursday of next week, looking at opportunities in oil and gas. So if you are interested in that, please do go and see Manya at the front desk and she will sign you up. Okay, without any further ado, I'm delighted to welcome our opening speaker for this afternoon's session. She's going to be giving us an insight into how the mining markets are doing, moving back into a supportive mining market. Delighted to welcome the Head of Research from Patersons Securities, Cathy Moises. Cathy.
Thank you, Leo. I'd like to thank 121 for putting on these conferences. We consider it an excellent venue for both ourselves and our clients. Patersons are proud to be gold sponsors of the conference. Basically, the outline of today's presentation is why Patersons? I mean, why miss an opportunity to promote my firm? Key themes in the resource sector. I've actually been an analyst for over 30 years, so I've certainly seen a few cycles in my day. Commodity price check. We'll run through the key commodities which we as a house cover and talk through that. Look at some of the 17-18 success stories, which have been very, very varied and some absolutely huge wins in the resources market over that period. So very exciting times for us all. We'll look at the price outlook, equity market update, and then 2018 outlook. Why Patersons? Patersons are one of the largest equities houses in Australia. We've actually got 14 billion under management in-house, and within that we've got roughly 3 billion within the resources space. We have a number of offices across Australia, but key offices in all the major cities, which is the main offices in Perth, but we've also got Sydney and Melbourne as well. We've got a fantastic research team run by myself, experienced corporate and institutional, and obviously very, very large flow through our private wealth network. With respect to research itself, we've got one of the most experienced teams in the market. I've, as I said, got over 30 years, and behind me, Simon Tonkin, Xavier and Cam Hardy have all got in excess of 10 years in the industry. Sector coverage, again, this is where we'd really like to promote. We've got 44 names covered within the resources sector, so plenty of the stocks which we love to look at are representative today and tomorrow in the market. We're continuously looking at new names, and like most of the people in the market, particularly interested in the new age metals which are coming out and coming in there for. Key themes. I think we'll all agree it's an exceptionally exciting time to be involved in the resources sector. Over the 30 years, I haven't had many days in the sun, and I'm going to enjoy it whilst it lasts, that's for sure. The Chinese economy continues to grow, and Australia with it. The US economy is clearly improving. We've got tax cuts, we've got lots of incentives coming out there. And I think the key theme which we're all noticing, and certainly having seen companies all morning, the new age metals are very well representative at today's conference and across the market in general. So really interesting times for us all. Looking to the more base metals and gold in particular, we really have seen a lack of new discoveries over the last decade or so, and I think that's predicated on the fact that we really have been unfunded and the exploration spend really has been below par over that period. Funding is now becoming available, and we really look to the whole sector to use it wisely. When we say it's an exciting time, look at this chart. We're enjoying an outperformance by the resources sector in general, but the small resources are leading the pack, and long may it last. China GDP, you can see the growth is plus 12% and continuing to grow, really creating some opportunities within the resources space for us all. The US growth is picking up, and at very positive earnings season, and correlation of 0.7 with GDP and the ASX 300 since the start of 2016. The theme we discussed before was the lack of new discoveries. Now, clearly, I'm an Australian analyst and we cover the Australian sector, so we're very much talking ASX-listed stocks here. But if you can see there, the last major discovery was in October 13 and Gruyere with Gold Road. And we really, it's predicated on the lack of spend over that period. And so looking forward to 18, we're really hopeful that we'll see the exploration market well and truly open and we'll start to see some new discoveries start to happen. This is another chart which really tells the tale. Capital peaked in the more boom times, and the last 5 to 10 years we've really seen an underspend in the whole sector. I think this is about to change. We look at, say for example, with the gold sector, which I know very well, most of the guys in that sector are very much cashed up. They've got boasting net cash positions in most cases, and the debt-burdened ones of the last 5 years are really coming in to have very low gearing. Caught up with quite a few of the names in the last couple of weeks when I was over in Perth, and the comment was that their scrip is very, very healthy at the moment, and to look to maybe leverage off some of the junior names, which are probably in the audience right now, is a real temptation for these seniors at the moment when they're really looking to a major growth phase in the sector. Commodity price check. Surprise, surprise, cobalt's leading the pack. And as I said, I've already caught up with 2 or 3 cobalt players this morning, and it really is a place in the sun for those guys. And long may that last. And really, there aren't many pure cobalt producers around. And so it clearly is an area of concern for the new age EV producers to source enough cobalt supply going forward. Behind that, nickel's staging a resurgence, again with the EV. And lithium behind that, and clearly lithium has been the theme over the last 5 to 10 years. And whilst the lustre has come off a little from lithium, I think some of the major houses have come out with some pretty negative comments on the amount of growth coming through from lithium may make the share price growth a little bit muted in the future. We feel maybe they're a little bit optimistic, assuming that everybody will come on budget and on time, and perhaps the lithium growth story should continue for quite some time to come. Success stories. Surprise, surprise, the 2 key success stories over the last year have been in the lithium space, in the majors, Kidman and Global Geoscience. But 2 of the stocks which we have under coverage at Patersons, New Century Resources, which is a zinc tailings play, has had very, very strong performance over that period. And Lynas, which I'm not sure, I think most people will now be familiar with Lynas, but it's the key non-China rare earth producer in the world. It's an ASX-listed stock and really come on and capitalised at 1.6 billion now. Really strong story, and I urge you to have a look at that. In the smaller names, we have manganese, lithium, cobalt and lithium representative. No gold present, so I think gold's probably something which we need to start looking at again for maybe another round of growth coming from those gold producers. The green economy, clearly that's where everyone's focused. Which commodity is underinvested in at the moment, which one's really going to grow, and how quickly is this EV phenomenon going to actually come into being, and where do we best place ourselves for investment within the sector? I think it's a really interesting story. Certainly we at Patersons are very much focused on trying to identify the up-and-coming names and really where we're going to see prolonged growth for our clients. I got this slide from Lynas, and basically it's showing that over the next 7 years, the growth in the hybrid and the electric cars is very, very large indeed. Indeed, the electric cars, in terms of Lynas's requirements, are 0.25 kilos for a conventional car, 2 kilos of NdPr, which is Lynas's key product, for an electric car. And basically we require a new Lynas every 4 years. Where is that going to come from? I mean, we're seeing the lithium producers and developers come up the sphere, but as far as the rare earth potential developers, they've got a major impediment in getting the chemical equation sorted out, and then major funding requirements, with usually $500 million to $1 billion required for a new fully operational NdPr production plant going forward. Lithium-ion batteries, similarly. I think everything in this new age, if we look through, this one actually goes through to 2030. We're not seeing any abatement if we go from 2025 to 2030. The whole story just seems to be growing and requiring more of these rare earth metals going forward. We discussed earlier on that we still remain very positive on lithium. Whilst if we go across the 121 conference or most of the conferences around, we are seeing some really interesting emerging new names in the lithium space, particularly in the brine space as they really start expanding their horizons. We feel that whilst there is a lot coming on, we never see it coming on time and on budget. So I think there still is a lot of space for all these new players to actually have a space in this new environment we're coming in on. There are alternatives, and I think having covered particularly the rare earths, a lot of these new players are very cognizant of the fact that we don't want a major volatile period where these metals are absolutely going through the roof, because you are going to see alternative investment if this happens. So we want to see a measured growth over an extended period of time to see this whole story play out to everyone's advantage. Cobalt, again, clearly only just coming to the forefront the last couple of years. Given the current limitation in the cobalt market, that most of it's produced as a byproduct, it's in difficult jurisdictions, it is becoming an area of concern that we don't have enough coming through. And again, with this conference, while there's some really interesting players, there probably are still a few years off. And certainly the lateritic nickels seem to be coming off in their production over the next 5 to 10 years. So it's an area of concern for the market that we may not have enough cobalt, and clearly an area which we need to focus on the growth stories going forward. Base metals, well, we still like base metals in general. We're neutral in the short term. Nickel and zinc seem to be testing their primary resistance, and copper at equilibrium. The AU dollar, US dollar seems to be weakening, and clearly that's supportive for the ASX metal sector, and we are forecasting that to continue over the medium term. Everything looks positive longer term for the base metals. The demand for nickel and copper is expected to increase with additional demand for the electric vehicles and lack of supply in the zinc market, which hence the strong performance by New Century Zinc in the short term being one of the very early new producers of significant capacity in the market. Where is the gold price headed? Well, I think this says it all. I mean, it's very difficult to predict the gold sector at the best of times, but having covered the sector for a long time, we're neutral at the moment in-house with gold. I mean, as Trump makes some outlandish statements, it clearly causes the gold price to oscillate upwards a little bit. But at the current levels, the market's generally in a pretty healthy state. Most of the companies I cover are building a lot of cash. All-in sustaining costs on Aussie dollars of most stocks coverage are around 1,000 to 1,100. So there's some pretty healthy margins out there. So we don't see any key reason, unless we have some major economic instability, that the gold sector is going to have any major moves up, or to the same extent down. I think it's in a very happy space at the moment, and certainly the whole gold sector's really enjoying the fact that they're in a really solid space financially. And we're really seeing some very conservative managers in the major houses which are growing their companies in a measured way, which I think is very pleasing for the whole market. Uranium's very interesting at the moment. We have a uranium analyst in-house, and he's very bullish for long-term uranium price. I mean, at the moment, most of the stocks under coverage are underwater at the current uranium price. So I think it's an area, as the whole world turns to a greener environment, that they may start looking back to alternative energy supplies such as uranium. Unfortunately, at the moment, we don't have many stocks under coverage, so it's not an area we can really focus on in any great extent. So in summary, the equity market update, clearly the market is opening for investment at the moment. We're seeing sort of a renewed interest both from private wealth, certainly from institutions in investing, and looking to our corporate market. The equity market is open for investment. We're seeing increased equity raisings, we're seeing increased IPOs. M&A is increasing in deal size, as you can see from this chart. Capital raisings are on the up, and I think as the sector continues to spike and people are really seeing some great returns across the sector, this trend is going to probably increase, if anything, rather than even stabilise. New floats are already increasing, and certainly as an analyst, I'm noticing that very much, that I've probably had 4 or 5 presentations already in the last 2 months, and probably over 16, 17 you saw minimal presentations coming through on the new floats in the resources sector. So moving on, obviously we're a few months into 18 now, and certainly we're all enjoying very good returns, and it's looking like one of the better years over the last 30 years I've covered the sector. We should see really solid support for at least the next couple of years, given the base which has now been set up for all these companies. Their balance sheets are great, some very good growth scenarios in some of these companies, and certainly exploration budgets are on the up across the sector, which should set the stage for further exploration success and further growth from that on. Stocks, the stock selection is very much being driven by the new age stocks, but still we get a lot of interest in the conventional sectors. The gold sector and the base metal sector is still getting its day in the sun. And interestingly now, I haven't raised it yet, but energy is also coming back to the fore, and the oil price is tracking at new highs for the last few years. And we certainly, having done a marketing round last year, seeing renewed renewed interest in the energy sector as well. That's the end of my speech for today. I hope that I'll be standing here next year, and the resources sector will be hitting new highs, and we'll be seeing renewed investment across the sector. And now I'll open and see if there's any questions.
Do we have any questions for Kathy here? I'll start you off with one. You mentioned that the gold miners, the gold producers, are generating large amounts of cash at the moment. What do you expect them to do with that cash?
Good question, Leo. Some of them are actually paying dividends, which is quite a novel experience for the sector. But I think Baker Steel pushed a little while ago that they felt if the gold producers could actually pay a royalty to the government, they should also be able to provide a royalty for their investors. And a few Evolution's the classic example who's actually taken that on board. So we're seeing dividend payments. We are seeing increased investment in exploration. And we're also seeing increased investment, particularly in underground development in the gold sector. I mean, historically in Australia, it was very much open pit, and now they're starting to go underground.
Are you expecting more M&A, though, over the coming year?
Absolutely, we're expecting more M&A. I mean, at the moment, sort of looking at the cross-section of coverage, I mean, we've got a few names represented here today. Kingston is one, but there's quite a few juniors with some very large-scale projects which rely a lot of capital. And I think some of those guys will be of a lot of interest to the seniors. And also the fact that the junior sector is still probably trading at a discount to valuation, and the seniors are trading, in many instances, near doubles. Their scrip is just well worth using to actually increase their overall valuation.
What's your take on, I mean, the panel at the beginning of the day, people were worried a little bit about the overall stock markets maybe having a correction this year, potentially then dragging down mining equities temporarily. What's your take on that sort of dynamic playing out over the year?
Look, the resource sector tends to be a bit of an island. I think where we've got the risk at the moment is some of the names are trading at very large premiums to valuations, and that's not only predicated on the strong commodity price market, but also the fact that a lot of the names continuously are delivering into guidance. So you've got that happy sort of situation where investors are pretty comfortable they're going to sort of get what's delivered. I think they're priced to perfection, so if there's any delay in delivery into guidance, that's where I see the key downfall for the sector, that we could see a couple of the big names have a couple of guidance misses, and they're very well held, so it's very hard to see them not have a major fall on the back of that.
But overall, you're pretty positive outlook for the year.
Yes, I'm very positive. Yeah.
Fantastic.